Good morning, everybody, or hello traders, depending on wherever you are in the world. It may be morning, evening, afternoon, whatever it is. Welcome to today's Bitcoin update. It is Friday, the 9th of August, 2024. And yeah, big move up yesterday. So a nice recovery across all markets. Funnily that, when everyone was calling doom and gloom and everyone was calling for a recession again, and there was this whole carry trade over from Japan. What happened? The Japanese market recovered it the next day, now higher than it was. NASDAQ recovered it. Bitcoin recovered it. And we find ourselves here, back in kind of the middle of the range again. So a decent move up, a nice little squeeze of short positions. I did take a short position, which has mainly put me just relatively flat on the market for now. I'm still holding my longs from when we did get that sweep of 52k. I'm long from around about 52,500. So I really didn't catch the low at all here. I just got in a little bit early before that last sweep. And yeah, just went short yesterday after a sweep of Monday highs. And just holding them both at the moment. So I've got a nice range to play with. I'll let go of the shorts if we do continue to push higher. But at the moment, I think we're at a zone where, yeah, we're going to probably see a bit of a struggle for price to continue to push through this area. If it does, I think it's pretty bullish. We can be looking back up towards the POC of this range. But right now, okay, we're going to go over in this video why I think we could just see it slow down somewhat. And yeah, a little bit of a retrace from probably where we are at the moment. So first of all, okay, the bounce. All right, so I covered this a couple of days ago, and it's bounced at a really interesting area. Okay, essentially what we did is we had a move through the impulse up that took us to new all-time highs. We came down and ran below that level, back testing the launch day, the ETF launch price. So this day back here on the 11th of Jan was the ETF day launch. And then, of course, what happened? Basically, to the tick, right? Price came back down, hit into that, and then off we go again. So a really, really technical area. A lot of this was missed. I myself was not really expecting another capitulation. We've already had a few of them. And yeah, it did cause me to get stopped on some trades. It was a little bit messy, but really, when you actually look at things, okay, it's very, very, like, that is a very nice level to be testing if we are to be going higher. Like, okay, this is the day that the ETF launched. We're going to tap it and then go. What we also had as confluence there was the 365-day rolling VWAP and the 365-day EMA. So if we just do that to a 365, and we make that it was also the SMA. So simple moving average, as you see here, and the EMA as well, a little bit higher. What a lot of the market is looking at right now are the SMAs, because price, as we speak, has come in to test the 200 daily moving average. What it has also done is it will be confirming the death cross. This is something I'm not really fussed about at all, okay? Sometimes it has an effect on the market. Sometimes it doesn't have an effect on the market. But the fact that we are bouncing into that as the cross is happening does mean that maybe a time to be a little bit cautious here. There has been times in the past where there has been significant weakness from the market. It has bounced into that cross and then you get continuation lower. So there, you do need to be a little bit cautious of where it's at right now. But very simply, I mean, if you can get through this and start to hold these moving averages as support again, then I do think it bodes well for higher prices over the coming weeks and months. So it's something to be aware of. Okay, the moving averages aren't massively significant. They do just lag behind depending on what price is doing. However, you do get traders positioning into them, and very often, like, even if you're going to break it and it's going to be okay, you can see here the previous time it lost that 200. It takes some time to get through, right? So the fact that this 50 EMA is coming down quite fast now, I would imagine that it takes some time to get through, and then we're going to look to flip it a little bit later on. So from when you just simply look at it from that perspective, we're back in towards the midpoint. What we also have here is that golden pocket from our high to low. So if I just draw my fibs on this little thing, there's your high from like whatever it was a couple of weeks ago. We've hit that 618. We have not closed above there yet, so there's no expectation of higher prices at this stage. Now, we are holding value area low. And it is, well, price is kind of right at that value area low, but value area being an area, I'm not expecting it to hold. I think that's relatively insignificant. What I would quite like to see is a move back down towards that 57, 58K area. And I think that could be a good point in which to start looking for long positions if you're not yet in long positions. If there is to be a retrace that comes back down again, that could be an area in which to look for them. Then you need to be aware of the invalidation. You've got to understand that the market is very undecided here. You just have a fast move down. It gets retraced, but no further. And that's what we've had on this occasion again here is we had the move down. Okay, this is when it started to get aggressive. We had the decent, let's get these EMAs off. Let's get these silly things off the chart. Right, there we go. So we had the decent bounce last Thursday, 1st of August. Okay, that was the point in which if the market was bullish, it would have continued higher, made new highs. It didn't do that. Okay, it retraced the entire move, and then we got aggressive beyond that. So at this point here, once you're closing through this gap, it's game over, essentially. What did price do? It went to seek the liquidity that was lower. And all the way down we come, all the way down to take out 50K, 49K, and then get that bounce from there. Now, what this has done, very simply, is just gone back to where it started. So it's not bullish, it's not bearish, it has just retraced a move that happened before. So you've just recovered it. It doesn't mean it could do that. It could do that. And it's pretty much neutral where price is at the moment. So we also have some interesting stuff. I think if we take an anchored VWAP from this high, then okay, of course, again, we've had that trend. You flipped it. You tried to make it into support. Didn't work out. Now you're coming back into it. The other thing that we have here, which is this highlighted zone, is we had a bullish gap that formed. All right, price did change market structure. It was holding these highs. As soon as you lose that gap becoming inverted, you go and take the lows, you're coming back into that gap and now testing it this time as resistance. It didn't act as support. Is it going to act as resistance? So similar to an order block, if you've got like a breaker block, like we have, I would say potentially even over here. Okay, you have this holding as support, you lose it. What's it doing? It's coming back in, testing it as resistance. So that order block that could once have acted as support is now being flipped into what at the moment is resistance until that gets cleared, and then we can be looking for higher prices. So I think it is a good time right now to be, if you are long from the lows, very good take profit, a very good point in which to take profit, or hedge your position. I hedged it a little bit early. It was when it was a little bit lower. So I'm relatively flat on the market here, but I do have a nice range that can be traded. And I'm kind of okay with that. I also have long positions in some of the altcoins and on Ethereum. So overall, managing to ride most of this move up. But yeah, definitely a take profit zone or hedge your position just to see how the market starts to react here, because it is uncertain. I'm not going to come into this saying that we're going to be blasting to new all-time highs. I don't believe that's the case. I still think we go through another few more weeks of just sideways here, which is why I'm in absolutely no rush whatsoever to get myself into big positions. I'm just taking small trades. I'm just doing summer things. And yeah, in absolutely no rush to try and chase this market around when it's just chopping around and getting people wrecked, and it's still like, it's just just kind of like it has been for a while. So levels that we can look at, I'm going to move over onto this chart, and then we can go down onto the lower time frames. So essentially my plan had been, and I had two longs. I had the long that I had caught from relatively close to the lows, but it wasn't great. And then I had a second long position that was taken a couple of days ago after the reclaim of a daily open and then recontinuation higher. So I've closed out my second long. I then hedged short around about that Monday high. I'm holding on to it for now, so I'm a little bit under on the short, but then I have the long that's in nice profit, and that's how I'm positioned. Now, other things that we can be looking at here is actually quite interesting. So we had this anchor VWAP that was moving down. Okay, you had a decent squeeze up yesterday. You flipped that VWAP into support, got that continuation higher. What this also has done on the 4 hour, and this is why on the 4 hour, essentially, okay, any short position that was taken from here was invalidated up here, but that's a big impulse through it. And then what this has done is then come into another gap on the 4 hour, which you then can consider as, once again, resistance as this starts to climb higher here. So you close through imbalance, okay, you go and take liquidity, you're into the next imbalance, and it's this 4 hour time frame that throughout the entire range has been really quite clean and has been working really well, that we're now just working at. So each time we come into these little gaps, these imbalances, we are getting at least a pause, at least a pullback, something that you could scalp, or in like the situation that we saw a couple of days ago, we had a bit of a bigger pullback in order to then be targeting higher prices there. Some of the other interesting stuff that's happened. So I also took a short back here on Wednesday. I think this was when we were doing we had our trading room at this point, and I was in the long position. We managed to get a short during the trading room. Now we were looking for these lows here to be taken, but actually when you look at the structure of this, a really good point in which to take profit when you're trading these kind of patterns, okay, if it's a wedge, all right, your overall target will be to go back down to the bottom of the wedge, but we did come back into that 618 zone. It did consolidate there for quite some time, and what we also had at that point was the VWAP coming in from these lows. Okay, so from the lows that we'd put in at the beginning of the week, we did have some nice support there. So once again, those VWAPs and those fibs had been working quite well. Is there anything else that I really need to say on this? I believe we've also got a POC on perps. If we go zoom out, point of control is at monthly open. It depends on what exchange you're looking at. So this is on Blofin, okay? And on, I think a lot of the perps exchanges, we have that POC around about that 64.5. On spot, it's higher at 67K, but there is confluence there, okay? If this is to continue to push higher, be aware of 64,500, where that is at the very least a high volume node, or what it also is on a lot of these perps exchanges is the POC, and that also brings us back into that monthly open. All right, so we had obviously the chop around the monthly open, the big move down, and then we've recovered a lot of that so far. Value area low is going to be different on different exchanges. Again here, value area high was the one that was slightly easier to trade. But yeah, overall, I think that is most of what I really want to be saying. Let's just have a look at what's going on very locally here. So we're down on the day. Okay, daily open, I mean, you had a big move up at the end of the day yesterday. We're down on the day. If we do just add the session VWAP onto this is if you are to be looking for continuation higher, then at the very least, you need to get back above that VWAP. So as we can see, so far today, it has been just trending lower, but it's barely doing anything. It's not like you can be looking at this as being overly bearish. There's been no extension away from that. There's some quite nice levels as well here. They're a little bit hidden. So that previous day VWAP close, even just looking on a 5 minute here, comes into a nice little imbalance that's on the chart down here, and it does test back into the highs that we had from yesterday. So after there was that sweep of Monday highs, this is the point in which I went short. Okay, you had a drop down, and then it just continued to bounce and went very significantly higher. Okay. If there is to be a drop down, I think that looks really nice. So that 58.4, 58.5 zone, previous day view up close, you're back testing yesterday's highs, so on. That looks pretty good. What this is also doing at the moment, I mean, you haven't even come back into these gaps that have formed down here. So this was after the New York session ended. Price went and seeked higher prices. And yeah, just so far, a bit of a correction. Does appear as if it could just go slope back up and try and make new highs. If there's to be an SFP off of the previous day high, that would also be a really nice short here. So there's trades to be had. There's really nice ranges to be trading. So if you are at your computer and if you are looking at the charts, there are good levels and they're like relatively simple to trade here. Like if previous day high gets taken, I think that would actually work out as a really nice short. It is a Friday. We're not really expecting anything too crazy to happen. We're going into a weekend, so if there is to be a situation where we do swing above that high, short positions could be a good play there. But again, we'll just see how it goes, see how it develops throughout the day. Now, anything else that we need to be looking at, I'm going to bring up the TPO chart. And we're just going to have a little look at that, because another reason why I think we do need to have some caution in this move here for now is just the amount of imbalance and the ugly profile that we had yesterday. So essentially we had this double distribution yesterday and then it just spiked up right at the end of the day. It's a pretty ugly profile. What you like to see within just a healthy market is to see balance. Okay, even on Monday we saw balance. We saw that it formed a low, and then we had acceptance that it wasn't going to go lower, and then we slowly grind higher. We have balance on Tuesday, we have balance on Wednesday. Then what we do on Thursday is just messy. Okay, kind of similar to what we had over the weekend last week. We just had these messy profiles, which then was like, okay, there's indecision here. Price needs to move away from these zones. It did, and then you have balance afterwards. So far today, we do have balance. There is balance outside of value area from yesterday, outside of the value area for the week. But we've got single prints below. Okay, there's been a tiny dip into those single prints so far. We've then got a big void between this double distribution that happened yesterday. We've got the NPOC down there at 70, I wish it was 70K, at 57,400. And then we've got single prints below that as well. So it's a bit messy. I think that goes towards what I'm saying. Like, if it can come and take these highs, I think seeking back into some of this balance from yesterday or the imbalance from yesterday makes sense. The other thing is I wouldn't be surprised at all to see an inside day here, which just means, okay, yesterday was a big day. It was a big range that got put in. So you're trading within the boundaries of the previous day highs and lows. Okay. And we would then probably expect the weekend to continue on with that. So there are levels below that would be kind of interesting, namely that point of control. So 57,400 POC looks kind of good from this perspective. Oh my God, what have I done there? So if we look at 57.4 and just see, because that is coming in as this POC, that takes us back. Okay, we can see why, right? There was volume traded there, a lot of volume traded there yesterday. If we're going to be doing these local moves, then I mean, maybe even we can build some confluence with that, where you have, again, you've had this move that came back into 618 from this locally. You've then had another move higher, so another move, and we're looking at that similar situation. If we are to draw this from high to low, then that probably takes us close to the midpoint. Actually, it's a little bit lower than midpoint. So it's levels to be aware of. Okay, it's actually the 382. So if there is to be this move down towards that 57,400, that would be a 382 shallow retrace for the move higher, and that could be when you could then target some longs to be like, right, going for new highs again after that. So a range to trade. There's kind of levels all over the place. That's generally what happens when you have these big wide moves like that. Finding confluence and finding the ones that you want to trade can be a little bit tricky. So just allow the market to develop, allow the price action to develop, see where there's those higher probability setups that are there. I'd say you're looking at real good setups if there is to be a sweep of the previous day higher, if we do get a drop to 57,400. Other than that, stuff in betweens, like scalpy levels if you want to be sitting at the computer all day. But yeah, nothing else really to cover. I'm not going to go over the order flow stuff or anything like that today. I think that's all fine. But yeah, and on that note, I am going to wrap it up. I'm going to say thank you very much for watching. Please hit the like button, subscribe if you've not done so already, and I'll see you in the next video. Cheers, guys. Bye-bye.